Cathie Wood and Ark Invest went bargain hunting last week. These are the stocks that they bought and sold last week. We're going to cover 3 stocks in this video. Of course, next week, big earnings week yet again, as you can see on the screen. These are all the big name companies that are reporting their latest quarterly results. Of course, we're going to cover most of them on the channel. More on that a bit later. So, on Monday, Ark Invest bought Tesla in 3 of their ETFs, in RK, RQ, and ARKW. And they sold those others, 2U, Zoom, and Caterpillar. On Tuesday, they bought even more Tesla, also across RK, RQ, and ARKW, and they kept on selling 2U, and as well a little bit of Twilio in the ARKW ETF. Then on Wednesday, they bought some Meta platform, Palantir, BYD, Blade Air, and another Meta platform, and they kept on selling 2U. They also sold Block, Stoneco, and a little bit more of Twilio. And then on Friday, they bought Roku, Meta platform, Palantir, BYD, Rocket Lab, Teledyne, Blade Air, and Roku again, Meta platform for ARKW, and then another Meta platform for the ARKF. And as you can see, they kept on selling 2U, Zoom, Teladoc as well across multiple ETFs. So I've picked out 3 of the stocks that they recently bought. We're going to go over the valuation metrics, the recent earnings results, and then for those that did not report yet, what we can expect. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, we really appreciate that. We're very close to reaching 40,000 subscribers, so maybe hit that subscribe button. It's free, you can always unsubscribe later. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So first company we're going to cover here is Meta Platform. Of course, I did a full review of the earnings report on the channel, but basically this is what happened. The stock went down. Currently, it's pretty clear that compared right now to the 5-year mean, we're basically at the same stage. Of course, you had the highs of the pandemic and then the lows of, well, the huge investment in the metaverse, them not really being as profitable as before. So you're having a mix there, but in my opinion, the company right now is much, much stronger than before. And to be honest, only looking at 2 metrics here already shows you the full picture. If you look at price to free cash flow, only 22.7 times, price earnings to growth, 1.03. And of course, this is a company that is growing now top and bottom line quite fast. Revenue increased 27% year over year. Cost and expenses only 6%. Income of operations exploded, up 91% year over year. And so you're seeing operating margin jump as well from 25% to 38%. Net income and diluted earnings per share are up 117 and 114% respectively year over year. Quick comment here by Mark. It's been a good start of the year. The new version of Meta AI with Llama 3 is another step towards building the world's leading AI. Why did the stock drop if the numbers were quite well? Well, it's basically because of the investments, because of outlook. So the CFO said they expect second quarter 2024 total revenue to be in the range of $36.5 to $39 billion. A bit weak-ish. The market was probably expecting maybe a raise or so. And then on top of that, you've got more investments. So they expect full year 2024 total expenses to be in the range of $96 to $99 billion, updated from their prior outlook of $94 to $99 billion due to higher infrastructure and legal costs. Then with regards to CapEx, so full year for CapEx, they expect to be in the range of $35 to $40 billion. That's an increase from their prior range of $30 to $37 billion as they continue to accelerate their infrastructure investment to support the artificial intelligence roadmap. In my opinion, quite the good move since they're now back at printing money. They gave us a couple of comments with regards to Meta AI Llama 3. So last week they had a major release of their new version of Meta AI. This is now powered by their latest model Llama 3. And their goal with Meta AI is to build the world's leading AI service both in quality and in usage. The initial rollout of Meta AI is going well. Tens of millions of people have already tried it. They believe that Meta AI with Llama 3 is now the most intelligent AI assistant that you can freely use. And now that we have the superior quality product, we're making it easier for lots of people to use it within WhatsApp, Messenger, Instagram, and Facebook. And as I've been saying for quite a while right now, not just for Meta, but for plenty of other companies as well, he who has the distribution will be the main winner. And so looking at the stock's movement, of course, we had that drop after the earnings report. Then throughout the day, throughout the last 2 days actually, we've seen some buying activities. I think many people like myself were saying this is not really such a bad report. So as you can see here, 2 green candles. Yes, there was a huge gap from the last time they reported earnings. Again, this is on the daily. Up next, company number 2, Ark Invest and Cathie Wood have been loading up more recently. That's Palantir. Palantir is going to report their earnings after the market close on Monday, May 6th. Now, of course, currently, compared to its 5-year mean, it is a bit cheaper. But if you look at the numbers, forward PE 68.5 times, EV to EBITDA 54.2 times, price to sales 18.7 times, price to free cash flow, that's in the last 12 months, 71.9 times, you could say it is quite expensive. If you look at price earnings to growth, it's at 1.54, meaning, yes, it is expensive, but there is an acceleration in growth happening here. And in my opinion, the expectations, currently the analyst estimates sits at around 20% growth or so for the year. In my opinion, they're going to beat that quite comfortably. And so you're going to see those numbers come down quite fast. Of course, unless the stock continues to go up and up and up, because I mean, year to date, it's up 31%. Since 1 year ago, it's up 190%. We know that for a company like Palantir, the most important part for me especially is to see sales reaccelerate, because we know it's a high margin business above 80%. So as long as there is more revenue coming in, we know that a large part of that will flow to the bottom line. For those that needed a small reminder of the numbers from last quarter, here they are. US revenue increased 70% year over year. But of course, remember, same quarter last year was quite a weak quarter. So that number does seem quite amazing. But just so you know, same quarter last year wasn't such a good one. Quarter over quarter, it also increased 12%. As for US commercial count, that's up 55% year over year and 22% quarter over quarter. Remaining deal value for US commercial is up 32% year over year and 28% quarter over quarter. Of course, AIP bootcamps, AIP now are going to reaccelerate the whole business. They closed 130 US commercial deals. US commercial deals closed are up 27% quarter over quarter. 3-year US commercial customer count growth of 13x. And then US commercial TCV, $343 million. That's up 107% year over year on a dollar weighted duration basis. If we go and look at total RPO, short-term, long-term, and billings, first of all, the deals, 103 deals of at least $1 million, 37 of which were at least $5 million, 21 of which were at least $10 million. So yes, we're seeing a reacceleration top to bottom line here. Of course, many of these deals, many of the announcements, it's going to take a while until you're going to see it flow into the numbers. One number I'm keeping my eye on and looking at it very closely is the net dollar retention. Last quarter was 108%, Q3 was 107%. So let's see if we can continue to go up. Then, of course, with regards to outlook for Q1, they expect revenue to be between $612 to $616 million, adjusted income from operation around $198 million at the midpoint. For the full year, they expect revenue between $2.65 and $2.66 billion, US revenue in excess of $640 million, representing a growth rate of at least 40%. It's very important. Adjusted income from operation between $834 to $850 million. Adjusted free cash flow of around $900 million at the midpoint. GAAP operating income in each quarter of this year. GAAP net income also in each quarter of this year. Now remember, this is a company that has a market cap of around $50 billion. $50 billion in market cap. Revenue per quarter of not even $1 billion. Despite us talking about that quite a lot, you have to realize that this company is worth already quite a lot, but it's still very, very early days. The moment we start seeing quarters where revenue is above $1 billion, I think that's where things are getting quite interesting. Then with regards to the stock's movement more recently, well, more recently in the last couple of days, we went under the 50 and the 20-day moving average, but we closed the week above that. The 200-day moving average sits at around $19 right now, the 50 at 22.34 and the 20 at 22.19. So we just closed above both of those. Of course, since they're going to report earnings, I think just over a week from now, the stock will be quite volatile. We're going to cover that on this channel. Maybe we'll even do a live stream. Up next, stock number 3 is probably a no-brainer, right? That's Tesla. They've been adding Tesla quite a lot more recently. Plus, they've also that huge price target of $2,000 per share in, I believe, in the next 5 years or so. In my opinion, I don't see it more than 10x in 5 years, but hey, who knows? This is the current state of Tesla. Of course, if you've watched the Tesla weekly video, you've probably seen this already. So yes, we are lower than the 5-year mean. But of course, I mean, if you just look at price earnings to growth, it is quite expensive, 5.36. Why is that? Well, because there is a deceleration in growth, especially for this year. But if we believe what management told us, we might or we should exit the year in a much better situation. Because even me as a very bullish investor in Tesla, I admitted that Q1 was not a good quarter at all. Yes, there were some good things. For example, energy gross margin was at 24.6%. That's up 1,370 basis points year over year. Yes, services and other revenue is up 25% year over year. That's great, but all the rest, really nothing to cheer about. We've talked about supercharger stations being up 26% year over year, supercharger connectors up 27% year over year. So yes, when Tesla opens up to more and more EVs, more revenue from superchargers. Why is that? Because non-Teslas pay a premium to use the supercharger network. Basically, this quarter and this call was them trying to convince Wall Street yet again that this was not just a car company, this was also an AI robotics company. I mean, we've been hearing about that for quite a while now. And then this sentiment shift switched when we read this, basically talking about the launch of the new models will happen ahead of the communicated start of production in the second half of 2025. They say might happen late this year, but I still think that is going to happen in the first half of 2025. And of course, this should allow them to get over 3 million vehicles of capacity when realized to full extent. They don't really have to invest that much more into their production lines, so that's also great from a profitability standpoint. They did talk a little bit about Optimus, so they said Tesla is best positioned of any humanoid robot maker to be able to reach volume production with efficient inference on the robot itself. Tesla's AI inference efficiency is vastly better than any other company. There's no company even close to the inference efficiency of Tesla. Of course, it's very important if you want to make an affordable humanoid robot and one that isn't super heavy, doesn't look weird, looks basically as smooth as possible. You have to be as efficient as possible with all the robotics, with all the computing power on the bot. Last thing here with regards to my comments on exiting this year much better. So they expect the energy storage deployment for 2024 to grow at least 75% higher from 2023. They expect the inventory build to reverse in the second quarter and free cash flow to return to positive again, which of course will help Wall Street look at this company in a, let's say, better lens, because right now it is quite expensive. Free cash flow was negative. So yeah, let's wait for the next quarter. The bar is obviously set a bit higher right now. There's also that event in August. So yeah, let's hope that they over-deliver and not really under-deliver. Then with regards to Tesla stock, well, the exact opposite happened than what everybody thought, including myself. So after the earnings report, the stock actually went up. We're now in between the 20 and the 50-day moving average. The 200-day one sits at $205. Of course, overall, in the grand scheme of things, if we look at the weekly, we are still well below the downtrend that started back in November of 2021. But maybe we have made a higher low right now. Remains to be seen what happens in the coming weeks, of course. So overall, that's about it. Of course, they also bought a little bit of Roku. I've talked about that on the channel as well. If you missed that video, it's going to be in the top right corner. Have you been buying any shares, any stocks lately? Let me know down in the comment section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.